Recent data revealed the sharpest and most severe drop in property prices on record, raising concerns of a property crash in Australia. So, is this the beginning of Australia's housing market apocalypse? If you end up finding value in this video, then please consider hitting that like button as it really helps out the channel. And a big thank you to all our subscribers who your support helps inspire us to create more. On the 7th of January 2023, CoreLogic's daily home value index hit a record decline of 8.4% after peaking in May 2022. This massive market decline all in the space of 8 months, meaning this peak to trough decline is the fastest on record. And just to put this in perspective, the second largest decline occurred in 2017 and took 20 months for prices to decline 8.38%, with Sydney seeing a 13%, Brisbane 10%, and Melbourne an 8.6% decline in values since their May peak. And stick around because later we're going to discuss reasons why the Australian property market will crash in 2023. More indebted than ever before, Australia's government gross debt surged from $534 billion in March 2019 to $885 billion in April 2022. This is the highest debt to GDP ratio we've seen since the 1950s. If only we were more like Norway with our natural resources. In 2002, Australia's household debt to income ratio was sitting around 130%. 10 years later, this jumped to 162%, and now this figure is over 200%. And based on the recent data available from the OECD, it means Australia has the 5th largest household debt to income ratio in the world. With interest rates rising, it puts pressure on borrowers, decreasing how much they can lend and increasing their repayments. Earlier last year, I caught up with a couple. We were looking at their borrowing capacity and creating a game plan to help them fast track their goals of buying their first home. A little over 7 months later, they were ready and had contacted me as we were looking for a pre-approval. Since our first discussion, the RBA had increased rates 1.75%, and this subsequently reduced their borrowing power by close to $200,000 in lending capacity. Luckily, this didn't have an impact on them as they weren't looking to borrow their maximum. Not only will interest rate rises affect your borrowing capacity, but your repayments too. Based on the average mortgage in Victoria, for every 0.5% rate rise, it means an increase in monthly repayments of about $190. With the average Westpac Group customer having $22,000 in savings, which is in line with current estimates, and the ASX 30-day interbank cash rate futures implied yield curve predicting that the cash rate is set to peak at 3.8%, which is a difference of 0.7% as of January 2023, it would seem that most have sufficient savings to weather the storm. But the question becomes, is the housing market facing an impending crash? Let's take a look at both sides of the argument, and we'll first cover the argument against, moving into the reasons for. In this, we can look at both sides of the argument and get a fuller picture of what's most likely to happen. One of the biggest reasons many experts believe that the real estate market won't crash is due to the supply and demand. KPMG found that Australia has a shortage of dwellings of more than 170,000 houses, with the Property Council of Australia finding that Australia has an average deficit of 20,000 homes a year for every year until 2032. With more than 116,000 people homeless and an expected 235,000 people immigrating to Australia each year, the real estate market will be sustained through high rental yields and lack of supply versus demand. Combine this with Australia being resource rich and it being one of the major reasons why we didn't experience a large economic impact from the GFC, funded by government incentives and policies aimed at addressing housing shortage and affordability. It's expected this will all have a positive impact, enabling more people to participate and thereby propping up the market. Now looking at the other side, and many believe that property will crash due to people's affordability and liar loans. With more than 1 in 8 people lying on their home loan application, it's feared that many home buyers will struggle to meet their repayments with interest rates and the cost of living rising, forcing many homeowners to sell. And This could all be likened to the subprime mortgage crisis that happened overseas in the GFC. The cause of this crash will be a financial strain on individuals rather than, say, a new world order or a great reset. Whilst the markets are complex, at its core, they're based on confidence. If people are spooked or forced to sell, it could trigger a reinforcing loop, which will subsequently cause the crash. Ipsos is a global advisory who conducted a 36-country survey which covered an array of topics, including what participants believe the economy will look like in 2023. The study found that Australia was among the top 3 countries whose participants believe that interest rates and inflation would likely be higher in 2023 as opposed to 2022. On the other hand, regarding the prospects of unemployment and the need for emergency funding from the IMF, Australia ranked low among countries on the list. So what do you think? Is Australia in for a property crash, or is now the perfect time to buy? Let me know your thoughts below. And here at Hunter Galloway, we're mortgage brokers who get home loans approved. We help Australia-wide and don't charge a fee for our service. Reach out and contact us online at huntergalloway.com.au or call us on 1300 088 065. Thanks for watching, and until next time, I'll catch you then.